Okay, guys, thanks for joining us here in the charts. You're tuned into the Market Beast edition. It is your fellow compositor speaking. Today's a very interesting video about GME. It has completed the 3-week selling cycle. Hopefully, we left you a link so that you can check out the reason that we say it has completed the 3-week selling cycle. Things are setting up more interesting than I would have thought would it be setting up on the GME market, guys. We're going to get over into that. I actually found a fractal that is literally about a day or a few days away from breaking out to the upside. So stick around to the end if you're loyal. Welcome back. If you're new here, consider joining us after we go over the details. So guys, let's not waste time. Let's dive right into this interesting 3-part fractal that I found in the charts here, shall we? All right, so today's April the 4th, 2021, and the previous close of GME is going to be $191.45. It closed positive, approximately 0.8% for the day. Okay. Welcome back, everyone. ASMR, interesting analysis. I'm actually pretty excited about this, guys. Here is what I found on the charts. That's it. Super simple. I'll explain everything. There's 3 parts to this fractal. The green part, the green oval actually represents the market bullish. It's called a bullish engulfing candle, the green little oval here. And then the second part represents the consolidation, okay, where the price action produces the bullish engulfing. The second part is the consolidation phase. And then, of course, the third part is the break up. Okay, so let's go back in history so that we can all just kind of know where it all kind of started. I'm only going to start at this reference point here. This is where we actually kind of entered and exited the market. And the first thing that we look for is the bullish engulfing candle. Okay, this is the number 1. Okay, January the 13th, 2021, where it's pretty obvious. We call these buyer's commitment candles. That's the first part. Now, of course, the second part is the consolidation phase in the purple oval area here. And I think this took place for like 7 days, okay? Let's see here. 7 days it took place. Yes, okay. So after the consolidation phase, the third part of the fractal is the actual break up to the upside. There's something pretty interesting about all 3 of them, and it's the first 2. I can't say 3 because the third one is pending. And the one thing that I noticed is there was actually a 250% minimum break up to the upside. So this first break up, I'm actually measuring it from I think it was the like the $30 or the $40 level, and it goes all the way up to the $123 level. I realize it went higher than that. But what I kind of do is I kind of try to take like the practical price levels in order to measure it to potentially understand where can we get the price target to meet or exceed on the next time that we find a fractal. Hopefully that makes sense, okay? So the second area is right here. I think it's pretty obvious, guys. The first thing that we look for is the bullish engulfing candle. It's number 1, the buyer's aka the buyer's commitment candle. Number 2 is, of course, the consolidation before the break up. I think this consolidation took place. Okay, so this took place for 8 days, okay? And then the third part of the fractal is the actual breakout to the upside. Now, this area we also measured from, I think it was $100 and $101, and it went all the way up to $348, measuring approximately 250% to the upside. So this fractal is also complete. We found 1, the bullish engulfing, the consolidation, and then the break up. So it takes us over to present day. I think we may have something setting up similar to what has taken place. That is only 2 reference points, as please don't use this as financial advice. So we already found the first green buyer's commitment candle, which is the bullish engulfing candle, March the 25th, 2021. Check mark number 1. Now the price action is currently within the consolidative phase. So far the consolidation has taken place for, I think it was like 6 days. Yes, so 6 days so far within the consolidation phase. So assuming that it would take place again, what has already taken place in the past, not 100%, guys. It should take between 6 to 10 days, since it's already taken 7 days. And the 7 days was the first little purple oval, and then this one was 8 days. So let's just speculatively say that we can say it'll take between 6 to 10 days. We can expect to see a break up between Monday, tomorrow, April the 5th, all extended all the way over to, let's see, let's just call it like April the 6th. let's give it a full 6 to 11 days to potentially have a break to the upside. Again, according to history, if this will play out, then it will likely break to the upside. And let's just see if we can get a price target here of potentially, I don't know, like 250%. So what we'll do is we'll start all the way down from the consolidative phase, and we'll start from like $175 and see where 250% to the upside will leave the price action, and that gives us a price of approximately $620 to the upside. How likely is this? Well, I'm not sure, guys, but this is the fractal. It's taken place 2 times in the past. Let's just do this. If we zoom in on the actual consolidation phases, what I'll do is I'll actually erase that oval, and I'll erase this as well, so this way we can actually see everything on the chart. And what I'll do is I'll actually pull up a rectangular range, something like this. Okay, remember, daily candles, okay? So assuming that the price action does not get below this area down here, which is at like $179, then yeah, I don't see why the history wouldn't repeat again and the market breaks out to the upside, because we'll actually erase this and just make sure that we're actually comparing apples to apples, okay? We'll put another rectangular range, something like here from the candle's bodies on the daily, and notice there was never any daily candles, whether there's wicks. I mean, if it wicks down, you just have to, as long as it can close above this level down here, as you can see, it actually did, $101, then yeah, the trajectory will continue to the upside. Guys, I realize that our videos previously had kind of an offensive tone, but it's always had a bullish tone, and we were actually spot on about the price going down to $150. It went down to $150. The buyer stepped in. The price is still in a bullish trajectory. That's always been the case, okay? And also, let's just kind of measure this purple consolidation range over here and see if everything is still aligning with the rectangular range. Yeah, so if we like do something like that, that's the only thing, guys. Notice that as long as the price action stays above the candle's body on the daily within the rectangular range, in this case it'll be $35, yeah, it's likely the price more than likely will do what it has done in the past. So that's what I'm seeing here. So let's just leave you guys out. I've already said it once, the $179 level. If the sellers cannot push the price down below $179, I mean, maybe it'll take a little bit more time to consolidate, but the more consolidation, the better, right? The sideways consolidation. If it just continues to do that sideways, then yeah, the price will likely go to the upside. Actually, and there's just one last thing, because I think what we did was, let's erase everything. Hopefully you guys caught that. Thank you for your time. We're going to cut it out here. The weekly candles is mostly what I focus on, just to kind of find, relative areas of strength or like resistance and stuff like that. I'll actually do this. Yeah, I think we had a symmetrical triangle or something, like a very bullish symmetrical triangle. I'll do something like this. If there is, in fact, some resistance in the market, which I'm not sure if there is resistance or not, guys. We're gonna open a weekly candle. These are the 3-day candles. I'm sorry, the weekly candles. Here's the selling cycle, the 1, 2, and this was the 3rd selling cycle in the 3-week selling cycle that we were referring to. And it appears that the sellers actually couldn't even close the 3rd candle as a red candle. So that represents a lot of buying activity in this market. So we're gonna open a new candle on the 5th, right here in this little kind of blank space here. If the market goes up to $229 and you notice that there's resistance, that's the reason why, guys, because of this descending line of potential resistance. Okay, if it breaks through, that's perfectly fine, and that will be perfectly in line with the trajectory. The trend is your friend until the end. GME is in a beautiful, very aggressive, undeniable uptrend. Is this price activity healthy? This up and down, back and forth? Guys, let's let the markets determine that. My personal opinion is there's a lot of volatility in this market. It's going up and down 100%, down 40%. I'll leave that for you guys to determine whether or not you would like to enter this market, okay? You have the time frame, you have the potential overhead resistance level, you have the targets, you have the level it needs to stay above in order for this to come to fruition. Yes, good. Out we go. Thank you for your time, guys. Leave an appropriate thumb just below the video there if you enjoyed the content. Also, leave a comment for the YouTube algorithm to pick up on the video and the channels. Also, if you're new, before you go, we'd like to offer you the alternative markets. We also go over that throughout the week, Bitcoin and altcoins. Well, we'd love for you to subscribe with us, and so that we can send you that information, okay? So that's it. Take care of yourselves, protect your portfolios, execute your strategies. We're going to talk soon, and bye for now.